this unit monetary mechanism that they're supposedly working on with BRICS, that's supposed to have a 40% holding. So you can work out here that Russia's still going to keep buying gold. They're 8.5% short of 40%. So here's the story. It's actually from the Jerusalem Post. Russia's gold holdings hit historic high, now 31.5% of total reserves. Russia's gold reserves have surged to a record-breaking 31% of its assets, marking a bold move amid global tensions and sanctions as the nation strengthens its economic defenses with gold. Uh, and it makes sense, of course.
In the last few years, we have seen a cycle of tightening interest rates, yet against all odds, a gold bull run has flourished. With these rate cuts, the outlook for gold may shift once again, especially among Western investors. Russia's gold reserves have climbed to their highest levels in 25 years, marking a significant milestone in the country's efforts to bolster economic stability amid an onslaught of international sanctions. In September 2024, the central bank's gold stockpiles reached 2,335 tons, representing the world's fifth-largest supply of the yellow metal. While Russia has consistently maintained a sizable gold inventory, the past few years have seen heightened demand. Highlighting Russia's strategic financial moves, renowned analyst and trader Mario Innecco points out that the country has boosted its gold reserves. He anticipates Russia will keep adding to its gold holdings until they hit 40%, aligning with the BRICS nations' plans for a resource-backed monetary system. As of October 1st, 2024, Russia's monetary gold reserves have surged by $10.95 billion, a staggering 5.8% increase, reaching an unprecedented $199.764 billion. Gold now represents a record-breaking 31.5% of the country's total reserves, marking a bold move in Russia's economic strategy amid global uncertainties. Concurrently, Mario views the West's freezing of $300 billion in Russian assets as a pivotal misstep that may accelerate the decline of the dollar's global dominance. He argues this move highlights the growing importance of gold, as Russia uses it to reinforce sovereignty and financial independence over fiat currency. Between 2012 and 2022, the value of Russia's U.S. Treasury holdings plunged from over $140 billion to under $10 billion, representing a staggering 93% decrease. That trend has only escalated since the invasion of Ukraine and the ensuing Western sanctions. Now we present the clips of Mario Innecco's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Sanctions drive Russia to gold as holdings hit record 31.5% of total reserves. And it makes sense, this 31.5%, because this unit monetary mechanism that they're supposedly working on with BRICS, that's supposed to have a 40% holding. So you can work out here that Russia's still going to keep buying gold because they're 8.5% short of 40%. So here's the story. It's actually from the Jerusalem Post. Russia's gold holdings hit historic high, now 31.5% of total reserves. Russia's gold reserves have surged to a record-breaking 31% of its assets, marking a bold move amid global tensions and sanctions as the nation strengthens its economic defenses with gold. And it makes sense, of course. And even if we hadn't had the Ukraine conflict, that started in 2014, of course, but the escalation that we had in February 2022, they might not have done this as quickly. And we might not even be where we are in terms of the price. But I think it's a major reason why they're doing it is because the West basically froze $300 billion worth of Russian fiat currency assets, mostly European bonds, some treasuries, and they're even using the coupon that they get. They're giving it to the Ukraine. So this is the biggest mistake, I think, that the West, especially the United States, has ever made. This is definitely going to be seen in the future when people look back as the trigger for the end of dollar dominance. and the comeback of gold. So there you go. In a dramatic shift in its central bank investment strategy, Russia has ramped up its gold reserves to restore historic highs, defying Western sanctions and reinforcing its economic fortress. As of October 1st, Russia's monetary gold reserves have surged by 10.95 billion, a staggering 5.8% increase, reaching an unprecedented, well, almost 200 billion. Yeah, they still have quite a bit to buy. I would say another almost 20 billion of gold to buy. And it depends also on how many fiat reserves they get. If it keeps growing a lot, they might need to get even more gold to make sure they keep it at 40%. Why is this important for us? We're not central banks. Well, I think it's important for us because it shows a country like Russia, and I'm not defending Russia. I'm just looking purely at how they defend their sovereignty. They do it with gold. You can't do it with fiat currency. And you do it by keeping those reserves at home. You might want to keep some of it with a friendly country to you, maybe like China, but I don't think they do. So it's the same thing for us as individuals, I would say. Of course, we can't buy it as much as Russia, but it's the same principle. And that's what I've been trying to warn people and tell people that you have a lot more sovereignty and independence. Yeah, you don't have to be dependent on the banks. And we're gonna touch upon the banks because I want to talk about why we can't trust banks. It's not that every banker and everyone that works in the bank is inherently bad. I think it's because the system is bad.
During the interview, Mario Innecco expressed his concerns about the current banking system, highlighting how the Federal Reserve's actions are favoring banks over the public. He notes that banks are benefiting from high interest rates without passing them on to depositors, keeping funds out of the real economy. Wall Street's biggest banks expect the Federal Reserve to end the process of shrinking its balance sheet next April, holding the line relative to what they told the central bank in July. The banks also expect the Fed's balance sheet to bottom out at $6.4 trillion, well above the $4.2 trillion mark seen before the coronavirus pandemic struck in early 2020, according to a survey. Open's new tab of so-called primary dealers conducted by the New York Fed ahead of the central bank's rate-setting Federal Open Market Committee meeting held last month. These banks serve as counterparties to Fed policy operations. Regarding the Fed's actions, Mario argues that nearly $1 trillion have been paid to banks since March 2022 to prevent lending to the private sector, calling it disgusting. This is why he chooses to place his savings in gold and silver instead of keeping large bank balances. Let's get back to the interview.
I'm not sure silver is being used for tier one asset calculations, and the tier one is for the equity of a bank, and you can use gold as an asset that's used to calculate tier one equity classification. Yes, the Basel III brought that up a couple of years ago. That's probably helped gold quite a bit, but I think the major reason gold has been going up is because of all the central bank buying since 2022, and of course, not from the West, but from the emerging markets or global South countries, because they're trying to diversify away from the dollar. They've seen what the West can do to your uh, dollar or euro reserves, which are mostly held in treasury bonds and European government bonds. So what's the option? Well, it's real money, i.e. gold. They can't take your gold unless they invade your country, like the Nazis did back in the 30s. And one of the first things they did when they invaded Czechoslovakia was go to the central bank and take all their gold. And they also made the BIS transfer all the Czech gold to the German BIS account at the Bank of England. That's why you need to probably have it at home as well. here's the story. Well, it's actually 1 trillion in windfalls. And the Bank of England did the same. The banks here did the same. We got rates raised to the Bank of England raised rates, their deposit rates for banks, the base rate over 5%. And the highest savings rate I got from NatWest, my bank, was like 1.75%. And that's one of the reasons why I boycott banks. I don't have that much balance with banks. And that's why I put my savings into gold and silver, because I don't want to subsidize these people. And I think it is pretty disgusting, as Judy Shelton says. Well, because in 2008, we bailed them out, these banks, the taxpayer. And this just goes to show that the game's rigged, that when they socialize losses and they privatize gains. And the Federal Reserve is really not the friend of the public. They're a friend of the banks. And it's basically daylight robbery, what they're doing, what they've done.
As the global economy teeters on the edge of instability, Russia's golden rise could reshape the landscape, challenging the dollar's dominance and sending a clear message that gold reigns supreme in times of turmoil. As central banks worldwide increase their gold reserves and diversify away from the US dollar, could we be witnessing the beginning of the end for dollar dominance on the global stage? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.